Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets hidden within company filings. Sometimes the numbers tell a wilder story than you might expect. Today we are diving into Eagle Point Credit Company Incorporated latest report, and let's just say there are some interesting figures here. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below where we break down even more of these financial narratives. Alright, let us get straight to it. This report is dated the 10th of October 2025. Now this is your typical deep dive into every single aspect of the company S operations. Instead, it is more of a quick update focusing on some key financial estimates for a very recent period. Think of it as a snapshot of where they were at the end of September. So what is the big news? Well, the company S Management has provided an estimate for their net asset value per S share of common stock as of the 30th of September 2025. They believe it was somewhere between $6.95 and $7.05. Now, net asset value or NAV is essentially what each share would be worth if the company were to sell all its assets and pay off all its liabilities. So this gives us a ballpark idea of the underlying value of their common stock at that specific time. But that is not all. They've also given us estimates for how much money they made from their investments, what is called net investment income, for that same quarter ending the 30th of September 2025. The estimated range for this income is between $0.22 and $0.26 per S share. This is the money they earned from their core business activities, like interest and dividends. After you take out expenses, higher net investment income generally means the company is performing well in generating profits from its investments. Now, here is where things get a little more dynamic. They also estimating their realized gains or losses. In simple terms, this is the profit or loss they made from selling investments. For the quarter, they re-estimating a realized loss somewhere between a loss of $0.1 and $0.06 per S share. This means they sold some investments for less than they paid for them. It is not uncommon for investment companies to have both gains and losses, as they strategically buy and sell assets. They even touch on their foreign currency hedging activities. For this same quarter, they estimate a small realized loss of $0.01 per S share related to foreign currency. This often happens as companies try to protect themselves from fluctuations in exchange rates when dealing with international investments or transactions. Even though it is a loss, the act of hedging itself is a strategy to manage risk. Looking at the broader picture, Eagle Point Credit Company Incorporated is involved in various financial instruments. Their common stock is listed on the New York Stock Exchange, and they also have several series of preferred stock and notes that are actively traded. This indicates a company with a fairly diversified financial structure, offering different types of securities to investors. For instance, you see their common stock here, which represents ownership in the company. They also highlight their Series C term preferred stock, which is due in 2031. Preferred stock is a bit different from common stock. It typically pays a fixed dividend, and it has priority over common stock when it comes to dividends and assets if the company were to be liquidated. The due 2031 part means it is a term preferred stock, which has a maturity date. This is a specific type of investment they offer, with a stated interest rate of 6.50% for this particular series. Another interesting piece is their Series F term preferred stock, which is due in 2029. This one carries a higher interest rate of 8.00%. The higher rate often reflects different risk profiles or market conditions at the time of issuance, and the due 2029 signifies its maturity date as well. Then we have their notes. For example, there are 6.6875% notes due in 2028. These are essentially loans to the company from investors. When you buy a note, you are lending money to the company, and they promise to pay you back with interest by a certain date. This particular note has a maturity in 2028 and a coupon rate of 6.6875%. And another example, the 7.75% notes due 2030. Again, this is another debt instrument where investors lend money to the company. This one has a higher interest rate of 7.75% and matures in 2030. These different notes and preferred stocks represent various ways the company raises capital, and each has its own terms and interest or dividend rate. Now, looking at these numbers from a Warren Buffett style perspective, we see a company that is providing its shareholders with estimates of value and income. The NAV estimate tells us the current estimated worth of the underlying assets per S share, which is a fundamental metric for any investment company. The net investment income estimate shows the profitability of their core operations. A healthy and growing net investment income is a strong sign. However, the estimated realized losses in the quarter are something to keep an eye on. While selling investments at a loss isn't ideal, it is how you manage a portfolio that can be more important than individual trades. The key is to understand if these losses are part of a strategic shift, a response to market conditions, or if they indicate a more systemic issue with the company's investment choices. The small foreign currency loss is typical and suggests their hedging strategies are working to minimize bigger shocks, even if they incur small costs. Overall, Eagle Point Credit Company Incorporated appears to be operating with a diversified financial structure, issuing various forms of debt and equity to fund its operations. The provided estimates give a clear, albeit brief, look into their recent performance. The strength of the company will ultimately depend on how consistently it can generate positive net investment income and manage its realized gains and losses effectively over the long term. The various series of preferred stock and notes indicate a company that is actively managing its capital structure. Alright, that is our breakdown of Eagle Point Credit Company Incorporated's recent filing. What is your take on these numbers and what they signal for the company? Future, drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.